Yeah, look, it looks, to Adam's point, like we've put in a near-term bottom. And it just really constructive moves in the equity markets. And like what you've seen since October is massive price to earnings multiple contraction. So you had a 3 standard deviation event in terms of number of companies raising guidance. You're looking at close to 13% earnings growth this quarter and then 18, 19, 20 for the next quarter. So while stocks have moved down substantially relative to their earnings, so I am with Adam 100% here. I am really encouraged by the charts, and it looks like we've put in a near-term bottom. And given the news overnight, this looks really encouraging how little we're down right now.
So do you agree with that, Adam, that we've seen enough petrodollar surpluses into Chinese assets and the architecture of dollar dominance quietly hollows out? Now, I don't think that's happening. But your thoughts? Yeah,
look, this conflict in Iran, even though it's the main thing we're talking about, is a bit of the sideshow to the U.S.-China relationships. And,
right.
They're fighting us in every different direction. And one of the most significant ones is the U.S. dollar, in that their fiscal situation is far worse than ours, if you can believe it. But they can print as much as their own money as they want, the same way that we can, so that they can buy all these goods from all these countries without any repercussion. Now, if they need to do that in U.S. dollars, there are limits to what they can do. And as their U.S. dollar assets dwindle, it becomes more difficult for them. And look, if you look at the long-term security, safety, prosperity of this country, it's going to come down to the greatest enemy we've ever faced, which is China. And I think this administration would do themselves a huge favor by framing this war in that. This is a very politically unpopular venture, even though it is essential for the future of our nation. I think President Trump is right to be doing this. I think he sees things far in advance that most people can't even imagine. And I think if they were to frame it better, you would see numbers turn around. And look, I think we're headed in the right direction. I think this journal op-ed hits it right on the, hits the nail right on the head.
Yeah, it's a good piece. Real quick, before we take a break, Mike Lee, expectations for the bank earnings. We're going to get Goldman Sachs any minute here.
Yeah, look, hedge funds are really, they've been loading up on these big banks as they've been selling off in this conflict. So Goldman had an absolute blowout quarter in the fourth quarter. We'll see if they can follow that up here. I'm expecting good news.
Yeah, I mean, and plus, I bet you they talk about a very strong pipeline of deals and IPOs. Don't forget, SpaceX is going public. That's going to lift many boats later on this year. That's on the other side of this war. All right, we'll get Goldman Sachs earnings when we come back. Stay with us. We'll be right back.
At JPM City Wells, so a lot is on the line right now for the financials this week, Maria.
All right, Cheryl, thank you. Mike Lee, I want to get your reaction because sentiment around Goldman has turned mixed in the last couple of weeks. Obviously, FIC is really important. That's fixed income currencies and commodities. And markets have been volatile. But it looks like trading desks have been one of the real bright spots here because of that, Mike.
Yeah, look, the stock turned negative off what seems to be a pretty spectacular earnings beat for them. And so all I'd say is, like, we'll see how the stocks close, because when you look at these and a lot of times you'll see a stock pop early in the morning and then close negative on the day. So we'll see how the market digests this all day long. It's spreading to the rest of the big banks, maybe for the hedge funds that own this. As I was saying earlier, according to Morgan Stanley Prime Brokerage data, these big banks is a crowded trade. So they're expecting ballpark numbers. So you could see great numbers from all of these, yet the stocks trade down slightly because it's not quite where hedge funds wanted it. I think this is a good sign for markets and the overall economy that we're getting a big beat from these big banks, even if these stocks trade off slightly over as we digest this.
I mean, Mike, I'm not going to be surprised to see the major banks trade down given the moves in these banks recently, right? I mean, one analyst this morning from Jefferies, here's the headline: JPM is expensive. It's not a perfect story in financials right now. JPM is not a screaming cheap, and even if the big guys are more immune to some of the geopolitical events out there, stocks have been moving already.
Yeah, look, before this price shock in oil, my thought that was over the course of the next year, you were going to see 100 to 150 basis points come down on the front end of the curve without much movement in the 10-year or the 30-year. So the steeper the yield curve, the easier it is for the bigger the banks to make tons of money.
Good point. All right, let's take a break, and then we've got Tennessee Senator Bill Haggerty on the other side of this break. Stay with us.
Yes, it does. Look, apparently the allegations are so serious that it disqualifies him to run for governor of California. But we know the bar is lower up on Capitol Hill.
Oh, God. What do you think, Mike Lee?
Yeah, it's just funny how these allegations pop out of nowhere when you have two Republicans winning the jungle primary in California. So California is a jungle primary state. There's too many Democrats running. So if the top two in the jungle primary are Republicans, you only have two Republicans on the ballot. So these allegations nobody knew about until last week, right?
Well, I mean, look, even Nancy Pelosi asked him to step down. I mean, you got a staffer saying, it was rape. I mean, it was just awful. The whole thing is just awful.
It's awful. Yeah.
All right, we'll take a break. We'll to what you heard from the president and the impact this morning with oil prices up. Stocks are down again. We're near the lows of the morning with the Dow down 489. Your reaction?
Yeah, look, I think stocks were way off their low until we got the Goldman earnings, which is a good sign in terms of you want markets to get stronger as the session carries on. But I'm reading just now that part of the reason why they couldn't get a deal done is the Iranians were afraid to basically call home and get the final sign off due to security risks and, I guess exposing their team's position, whereas J.D. Vance was able to communicate with Trump and the rest of the team here frequently during these negotiations. Hopefully that means we're much closer to a short-term deal than the market believes. With that, look, I think we're off to the races in the markets if we do get something.
So you think that this market rips higher once we get out of this, once you expect, and you do expect, that the Iranians come back to the table? The president just said it. He said he is expecting at some point them to relent.
Yeah, I think we're going to have a spectacular, their earnings this quarter up 12%. 18, 19, 20 for the next 3 quarters, and guidance keeps going higher. I think the market is on a spring, coiled up, ready to go as soon as we can get this put behind us and oil kind of resumes back that $70, $80 barrel range.
And Mike Baker, interesting to see the president's focus on armed services in all of this. He wants